Hello and welcome to video number 11 in a series of videos designed to demonstrate how to use the Fractal Suite with the Bloomberg trading platform. In this video, we are going to examine and look at the final panel in the Fractal Suite template. Now, this template holds an indicator that is called the fast forward indicator. The purpose of the indicator is to tell us whether or not the market looks like it's going into a trend and what that strength of that trend is. Now, the indicator has nothing to do with the arc. It has everything to do with the predictor. So it's you can think of it as somewhat simple in that sense. It's using the forecasts up to 3 steps ahead and comparing each forecast to the prior forecast, and then it's coming up with a number between 9 and -9 to determine what the strength is of that forecast and in which direction. So rather than describe it verbally, let's go ahead and show it to you. Click down here to our inputs. We have our forecasting algorithm. I'll just leave the default fractal regression for right now. The prediction horizon, we will experiment with this, but again, I'll leave this at 0 for the moment. The only indicator input that you need to concern yourself with outside of the predictors is the plot no trade zone. And essentially what this is doing is it's showing you an area that you can determine where the strength is not great enough for the indicator to signal a trend trade in one direction or another. So I don't know, let's put this at say number 4. Pick an arbitrary number, and we just scroll down to plot fast forward trend, select the checkbox, click update. Give it a few seconds to calculate. Okay, and here we have this crazy looking oscillator at this resolution. Let's go ahead and first, let me set this to 10 days so we get more of a zoom effect. Alright, now this is a little more clear. Now I'm going to shrink these panels so you can see this better. Alright, that's about where I like to look at it. Okay, so what you're looking at here is 2 different lines, obviously, that are exactly the same thing. Now, one is leading and one is purposely delayed. The reason why it's purposely delayed is so it's easy to see quickly that there's a change in the direction of this indicator. So why is that important, you may ask? Well, let me tell you. The reason why is because we're looking at a range of 9 to -9, and what that range is telling us is which direction the market is moving in the first place. As a matter of fact, let's add the 0 line on there. So we'll go down to our 0 line plot, update. Okay, so we have the 0 there. So what we're saying is that anything that's south of 0 or negative indicates that the market is moving lower. Anything that's north of 0 indicates that the market is moving higher. Now, what is determining this is the predictors themselves. So I'm going to plot a predictor on here on this chart, and then that way I can give you an idea as to what we're looking at. So let's take the fractal regression, which is what the fast forward is being calculated on. Oh, by the way, if you change the predictor or any of the settings for the predictor, it's going to affect this indicator. So let's take this prediction horizon of, say, 0. And well, actually, let's leave that for now. Okay, let's go to plot close predictor. And this is using the predicted high, the predicted low, and the predicted close. But just to give you an idea, make it easier to see, I'm going to start with the predicted close. So if you can imagine that we're saying, okay, we're going to plot, we're going to use a prediction horizon of 0. What this indicator is doing is it's looking at this prediction here, okay, and you can see on predict close 9150, and it's going to compare it against the prediction behind it at 9164, and then it's going to look at one more prediction behind that, which is 9122. Okay, so 3 different predictions. It's going to give each one a rating based on whether it's higher or lower than the previous one, and then it assigns it a value. Okay, now that's what it's doing for the close, and I used only the close so it would be easier to see how this is working. Now what it's doing in reality is it's looking at more than just the close. It's also looking at the high and the low. So we'll click update here. So we plotted the high and the low and the close. And now what it's doing is it's comparing, it's doing the same type of a comparison that I showed you with the closing prediction, but it's also looking at the high and the low, and it's assigning them the same value, and then it's comparing all of those values together. So if we were to go to say a prediction horizon maybe of 2, and let's see, I believe our forward shift forecast is clicked on, so we should see the prediction shift into the future. Okay, let's try that one more time. Oh, it didn't take. Let's update this. Okay, so now it's giving us a forecast 2 steps ahead. So what the predictor is doing now is, and I'm going to, again for the sake of clarity, remove the high and low predictor from the chart. But just think that what I'm going to show you with the close, it's doing for all 3 predictors at the same time. So I'll take this tracking mark here. Let's see if we can move this. Actually, what's going on? All right, let's move the legend out of the way. And all right, so what it's doing now is it's taking a comparison between the prediction 2 steps ahead, comparing it to the next prediction, which is what? Here at 91.86, and then the next prediction 92.23, and it's assigning them that same value. Now because all 3 of these are moving in a downward direction, it's going to give the strongest indication that the market is going to move down for the close. So consider that a -3. Now if we have the same effect, imagine with the high and the low, we'll have a -3, a -3 for the high, and a -3 for the low, which will give us a -9. So that gives us the strongest signal that the market is going to move in a downward decreasing direction. So that's how this indicator works. Now you can control this no trade zone very easily by going back to our input value here, and you can see that see, I thought this was changed to 4, but let's change it to something really easy to see. Okay, 6. Okay, you see the difference now? So one of the strategies, which I'll get to in the strategy video section, uses this indicator, and it follows a very simple process. If the actual value crosses above what your no trade zone value is, then it signals a trade in that direction. So in this case, it might signal a trade to the upside. and the opposite for the downside. Now, one other thing though that you can do with this, and this is different than the way that strategy works, but I've traded this way, and it works quite a bit, is rather than worry about whether or not it's crossing the no trade zone, you can trade it off the extremes in some cases, depending on what your setting is for the prediction horizon. And what it will do is, like for instance in this case where it's coming off of one extreme and then headed down to the other one and then bouncing to the other side, you can use that as a signal to go short, or in this case to go long from the extreme side. And that has a tendency to work quite a bit. And if you exit the trade when it starts to basically waffle in this intermediary no trade zone, then that can save you from being chopped in the trade. So that's those are two different ways you can use the indicator. You can also use it as a confirmation with the entry channels. You can use it by itself. You can also use it in conjunction with the arc, which I also find to be very effective. So this concludes video number 11 and the last video on the different indicators in the Fractal Trading Suite. Thank you for your time, and we hope you enjoyed the series.